Hello and welcome to Between the Lines, the podcast that dives deep into the stories reshaping Asia Pacific's insurance and reinsurance landscape. We are recording here in the Hong Kong newsroom of InsuranceAsia News. I'm Mithun Varkey, the editor-in-chief. As always, we bring you a quick recap of the biggest stories of the past week and a sneak peek into the stories the InsuranceAsia News editorial team is working on. Our special guest this week is Chris Methven, CEO of cyber specialist CyberCube. Chris sits down with senior reporter Aidan Gregory to discuss the development of the cyber insurance market in Asia Pacific, as well as CyberCube's ambitious growth plans in the region. It's a fascinating conversation. Listen in.
Yeah, so the Asian market is critical to our medium to long-term growth plans. The Asian market is one of the fastest growing global markets for cyber insurance, arguably the fastest growing. There's traditionally been low insurance penetration and there's been rapid digitization, and that creates a massive opportunity for the cyber insurance industry and CyberCube by extension. So we operate globally today, including in Asia, where we serve several regional leaders in insurance and reinsurance, along with a growing cohort of brokers. But Asia remains a really key growth driver for our business. And so we're constantly striving to drive greater regionalization in our models and ensure optimum data coverage. Keen to support the fast-growing cyber insurance market in Asia in any way we can.
Joining me today are our regulars, Deputy Editor Andrew Mullen and reporters Joana, Nguyen and Roshan, Nambiar. Welcome, everyone. All right, let's get into it. The war in the Middle East shows no sign of easing. Weekend talks between the US and Iran and Pakistan ended without any breakthrough, dimming hopes for a swift resolution. Still, US President Donald Trump told Fox News on Tuesday that the conflict is close to over and suggesting another round of face-to-face discussions could take place in Pakistan later this week. At the same time, the US has stepped up its military campaign, imposing a naval blockade on Iranian ports and maritime routes through the Strait of Hormuz. The Pentagon says the move has effectively stopped all seaborne trade in and out of Iran, a major escalation in the standoff. The conflict's economic shock is being felt well beyond the region. The IMF this week trimmed its global growth outlook to just 3.1% for the year, citing heightened geopolitical risks, while projecting headline inflation of 4.4%. This certainly has policymakers, businesses, and consumers on edge, and the insurance industry is no exception. We've been tracking the war's impact on insurers closely. Joana, you've been speaking with the market sources. What are they telling you?
Most recently, I spoke to two of Lockton's regional heads of marine, Sung Wook Han and Derek Shum. They told me that the war rates have increased, in some cases by hundreds of times, and very easily 20 to 30 times higher. They've seen rates going up to, 15 to 20% of a ship value just for a single transit, which is very prohibitive. However, having a piece of, paper confirming insurance coverage doesn't solve all the problems that may potentially happen when a ship crosses the strait because, for example, they may face, missile and drone attacks. The ships may be running aground or sinking in the Iranian waters. And should a claim happen in the Iranian waters, there are lots of complications we have to consider. For example, the sailors may be detained in Iran. Chances are the salvage company has to come from Iran. You cannot pay because Iran is sanctioned. And due to those reasons, even though there have been many inquiries asking about war coverage for transit, not many have actually materialized, with the majority of ships and cargo remaining stuck in the Persian Gulf.
Indeed, sanctions is a major concern for all parties involved. The war has led to war rates skyrocketing, but how about capacity? Is there enough capacity available? And are you seeing a contraction in companies putting out capacity? And what sort of claims are we seeing?
Right. So capacity is still there. We've seen a couple of new MGAs in the past few years entering the war market following international conflicts. For example, the Houthis attacks in the Red Sea or the Russian-Ukraine war. However, because of the recent situation, the capacity gets more selective and conditional. Underwriters have to assess their total exposure and wait for the cargo and ships to gradually clear out the risk area before the pressure on the financial bottom line eases. That's why the rates are maintained at a high level and they are not easily fluctuated even after the 2-week ceasefire was announced. In terms of claims, obviously we see several physical damages coming in. Lockton in particular has seen 29 incidents where debris from destroyed drones fell onto ships and caused damage, resulting in claims averaging $5 million each, which is not huge, but a sizable amount, he said. However, they expect claims from trade disruption, insurance, and loss of hires to be fairly significant. They don't know the exact quantum yet, but when ships are finally able to sail away and resume normal operations, lots of claims for trade disruption insurance and loss of hire will eventually materialize.
Right. I mean, trade disruption insurance and loss of hire is a whole new line of claims coming up there potentially. Well, that's what's going on around the Strait of Hormuz now. But closer home, for insurers in Asia Pacific, how is the war impacting them?
Right. So the one who is likely to bear the brunt of insurance losses from the conflict are global reinsurers and specialty insurers who have, broader international operations. For Asia Pacific insurers, they could also face losses through marine and cargo policies, given that some of the trade flows are from the Middle East trade routes. However, the premium contributions are typically small, representing 1 to 5% of total premiums across most Asia-Pacific jurisdictions, except for Singapore, where marine and cargo insurance contributed approximately 10% of premiums returns in recent years. However, according to a report by S&P Global Ratings, a potential vulnerability for Asia-Pacific underwriters is that because this region is a massive net energy importer, heavily reliant on crude oil and liquefied natural gas from Middle East, the conflict, if it gets prolonged, could lead to claims inflation across multiple property and commercial lines and prompt hikes in premiums. The demand for political risk and business interruption insurance may also increase because of the supply chain disruptions and weaker global trade. At the same time, premiums, volumes, as well as demands for, marine, cargo, and trade credit insurance, as well as related lines, are also expected to be lower because of the reduced trade activities.
Thanks, Joana. Moving on from the war, this week in Australia, we saw Sompo announcing massive expansion plans. Andrew, can you tell us a little bit more about Sompo's plans in the region?
Yeah, so Sompo is stepping up its presence in Australia, bringing in 9 underwriters across Sydney and Melbourne. The insurer has been in Australia for about 60 years, but this move marks a much broader push into the specialty business, including property, casualty, financial lines, energy, construction, and beyond its traditional focus on Japanese accounts. The new team, understood to be largely from Everest Insurance, which, as we know, has shut down its Australia operations. Paul O'Neill, who oversees Sompo's commercial P&C lines in APAC, will lead the Australian operations. We understand that the new recruits are Andrew Lester as head of property, Matthew O'Brien, head of casualty, Arthur Constantino, head of energy and construction, and Joshua Luck, who will lead financial lines. They're joined by Michael McCarthy in casualty, along with financial lines senior underwriters Chris Sharnock and Warwick Hansen. Sompo says the move supports its goal of becoming one of Australia's leading insurance providers. And Kenneth Riley, the chief executive for insurance in Asia Pacific, says this is another important step in building a diversified global P&C platform with strong positions in the markets that matter most to clients and broker partners.
Thanks, Andrew. That's quite interesting for Sompo to move in and take over a whole load of people from Everest. It'll be an interesting bet from Sompo. Talking about Australia and an expansion, just last week we saw a big announcement from the Ardennar-backed broking group Invest, which has been very active in Australia from an acquisition perspective. They've done a lot of deals, and last week we saw them sort of restructuring the broking business as well as doing some deals. Roshan, you've been following that situation. Can you tell us what's going on with Invest?
Yes, so Invest Group earlier this month reshaped its broking portfolio, signing a non-binding agreement term sheet to sell 2 of its authorized representative networks, Resilium Insurance Broking and PSC Connect, to the Steadfast Group. Under this proposal, both networks will be folded into the Steadfast-backed offshore AR network, positioning it as among Australia's largest representative groups in the industry. About 150 authorized reps from Resilium and PSC are expected to transition, along with several staff members, to help ensure a smooth handover. Offshore's CEO, Scott McCarthy, says that the move will open up major opportunities for brokers, clients, and their teams. And Envest CEO, Greg Mullins, he described the deal as part of a clear strategic refocus to concentrate on the company's equity-owned broking business. It's worth noting that the AR businesses Envest owns stakes in, including Resilium Partners and PSC Reliance, aren't part of the proposed sale.
Thanks, Roshan. I mean, that's quite interesting. I think since the acquisition, the big, $1 billion acquisition of PSC, the restructuring was expected. And following that sort of deal announcement, there's also been some changes in the leadership and how they structure their broking business. Roshan, can you tell us what the new structure looks like?
PSC Insurance Brokers Chief Executive Benjamin Goodall has been promoted to the CEO of Envest Broking, which is the new broking pillar. Based in Melbourne, Goodall will lead a broad and fast-growing broking business that writes more than Australian dollars 2.3 billion in gross written premium. That portfolio includes PSC Insurance Brokers, where he previously was, the owner-driver-led Aviso Group, and Envest equity-owned authorized representative networks. Goodall says that his goal is to build what he calls Australia's most future-ready broking platform, one that's powered by digital innovation and streamlined operations, while CEO Greg Mullins, who we spoke about when describing the deal with Steadfast, said that the restructuring is all about creating real efficiency behind the scenes while keeping service close to clients on the ground. The broking arm will be supported by a strong leadership team, including Jeff Mull, Travis Kemp, Ben Hasty, Josh Roach, and Sarah Grant. And in another leadership change, Craig Robson, currently CEO of Envest Networks, will step into a new role as investment director and head of placement.
Thanks, Roshan. Yes, Envest has been on a hiring spree across its businesses. We saw that big raid Envest owner Aviso did on Lockton. Some other big names here as well: Travis Kemp, Josh Roach, who is formerly head of Marsh. Big names there, so it's quite an interesting development from Australia. Talking about another leadership change news, we saw that big news from Swiss Re last week. Andrew, you were the first to break that story. Can you tell us how you got that story and what the news is?
Yeah, so it was a bit of a hectic end of the week on Friday. Ronnie Tong, we got the news that Ronnie Tong will be leaving his role as head of P&C facultative for Asia at Swiss Re. He's been replaced by Yusuke Matsumoto, who's set to take over the role on an interim basis. And now we found this out because we got an out-of-office reply from Ronnie Tong saying his last day with Swiss Re would be the day after, the following Saturday. And he also confirmed in there that who his successor would be. We got this news confirmed by Swiss Re themselves, and also they'd already started updating their profiles on the website, and that showed that Ronnie Tong would be probably remaining on as an advisor. It didn't show for how long, but we suspect he's going to hang around a little bit to help with the transition. Tong had joined Swiss Re in May 2020 from Asia Capital Re, while Tokyo-based Matsumoto is the current head of facultative property for Japan. He's been with Swiss Re for about 12 years. Yeah, so this marks a second big exit from Swiss Re recently, following the recent departure of Victor Cook.
Yeah, there's been some big moves around in the reinsurance market in the region. Of course, Victor Cook's moved to Peak Re last month, and Tong leaving Swiss Re. The other big news we saw this week was the appointment of Kenrick Law as head of underwriting and branch manager for Berkeley Re Asia Pacific starting June. Singapore-based Law was most recently regional CEO and head of P&C client management at Allianz Re, where he worked for 12 years. He was also the chairman of the Singapore Reinsurers Association until he left Allianz Re. Like Tong, he's also an alumni of Asia Capital Re. Interesting move from Law, and also sort of ambitious move from Berkeley Re, which has not been doing a lot of treaty out of Asia until recently. They set up their treaty business in Asia only late last year. So I guess we'll hear a lot more about Berkeley Re in the region in the coming coming days.
And interestingly, Law has been replaced at Allianz Re by Anna Coles, and I just got confirmation this week that she's agreed to an interview with us. So we are working on the details of that, but we're expecting that to take place before the end of the month, and hopefully she'll be a podcast guest. So watch this space.
Thanks, Andrew. Certainly looking forward to that interview. Now, turning to NatCats, it's been relatively quiet on the NatCat front for us in Asia Pacific, thankfully. But just over the weekend, we saw some NatCat activity from New Zealand. Andrew, you're across that. Can you tell us what happened in New Zealand over the weekend?
Yeah, this involves Cyclone Vaiana, which made landfall in New Zealand's North Island on Sunday. This triggered floods, power outages, and a lot of evacuations. Those evacuations seem to have worked, as there's no reports of casualties. The cyclone crossed the coast, packing destructive winds of 130 kilometres an hour, heavy rains, and creating large swells. And the National Weather Service actually described this as a life-threatening system. But as I said, no reports of any casualties so far. Several regions were under declarations, emergency declarations, and had red level wind warnings.
Indeed, there was also a high tide that coincided with the cyclone making landfall. And we did see some visuals of some surfers trying to brave the waves. Andrew, I'm going to have to bring you back in again. One of the big stories that we had this week was about the Lloyd's transition from Blueprint 2. We reported last month that after many years of trying to get that, get Blueprint 2 going, they've pulled the plug on it. What's next for Lloyd's much-weighted technology transition?
Yeah, Mithun, thanks. Yeah, it's not necessarily new news that the project's been canned, but we had a quite an expansive story on the website recently, which went into quite a lot of detail about Lloyd's plans, what's going to happen next. Now, just a reminder, this project has been going on for some time, with estimates putting the cost at $600 million US. And now Lloyd's have confirmed this is going to be sunsetted. Next steps, well, they're still looking for transformation, but this is not going to have, and this is their quote, the big bang that they initially planned, and they'll be using small initiatives to make these changes, with CEO Patrick Tiernan saying Lloyd's would look to move the market forward. So there's still plans for changes, but we're going to watch this space on how that materializes, because they haven't been successful in recent years to bring this project forward. So we'll definitely be keeping an eye on that one.
Yeah, that was a lot of money spent on a tech transition that did not work. It's not surprising, and it's not the first time these mega projects haven't gone the way it was planned. It'll be interesting to see what they find out from their post-mortem of what went wrong there. That's the big headlines from the past 2 weeks. Looking forward, team, what are you guys working on? Joana, what's on your plate this week?
So later this week, I'll be having a meeting with Techcombank, one of Vietnam's largest joint stock commercial banks. So they're starting a new non-life insurance company, and they're coming to Hong Kong later this week for the Overseas Talent Show. So I'll be speaking to Pranav Seth, who is the chairman of Techcom General Insurance. So it will be interesting to see what's their strategy is they growth plan, especially when there's a lot of infrastructure projects going on in Vietnam, as well as, the global development of AI-driven technologies for insurance as well as healthcare. So please look forward to that.
Yeah, certainly. I think Vietnam is certainly one of the most vibrant insurance markets right there. We saw a reinsurer launching earlier this year, as we first and exclusively reported. So looking forward to your story, Joana. Roshan, what are you working on?
So given the importance of cyber attacks in current conflicts, even including the Iran war, where they haven't spoken about it much, I found it quite interesting to see if there's something to do a story around political violence and terrorism insurance, and how they address cyber-enabled attacks, whether there are any gaps, challenges, and how pricing or underwriting can, if it's similar pricing capacity, underwriting is similar or different for cyber-related political violence risk, given how the landscape can change very quickly. And also whether current cyber coverage in PVT, in political violence insurance, has involved digital or physical elements as well.
Yeah, I mean, war and cyber is a very vexed issue. There's a lot of exclusions there. So, it'd be interesting if you can shed some light on how that that'll all play out. On my end, I have a couple of things that I'm working on. One, potentially story in the MGA's market in Asia Pacific. I'm meeting Guy Carpenter. I'm hoping to have a conversation with Steve Warwick, who heads GC Access there. Guy Carpenter's a consulting service for MGAs. I also have another interview lined up with Aon on their data center focus and the products that they're developing for the data center market, which is all the rage these days. And this week, on Thursday, we also have our cyber conference in Hong Kong. So that'll be an interesting one. It's already sold out, as we understand. It's going to be a really good event, and there'll be potentially a lot of stories from our conversations and the panel discussion. So do look out for our cyber coverage in the coming days. We're all going to be there, and there's more than 100 delegates. So there'll be a lot of stories. That's a wrap, everyone. It's been a fantastic meeting. Let's all get back to work.
Thanks a lot, Mithun. Thanks, everyone.
Welcome to Between the Lines. We're joined this week by Chris Methven, CEO of CyberCube, the UK provider of cyber modelling and analytics to the insurance industry. Chris has been with CyberCube for 6 years now, having previously been Chief Growth Officer before he was promoted to CEO in February this year. Congratulations on your new role, Chris, and thanks for joining us on the podcast.
Thanks, Aidan. It's good to be here with you.
How has the new job been so far for you?
The new job's been great. We're at an exciting time for CyberCube, having brought on a new cornerstone financial investor in Spectrum Equity in Q4 of last year. And that just gives us the ability and the firepower to look at placing some big bets on where the market's going to go and what our clients are going to need from us. So it's a really exciting time for me to step into the role, and look forward to talking to you about it today.
CyberCube has already been on quite a significant growth journey, but for those of our listeners that might not be so aware, what does CyberCube offer, and how is the company helping insurers?
Sure. So CyberCube supports all the links in the cyber insurance value chain, from retail brokers through to specialist ILS investors. Think of us as the financial quantification of cyber risk for insurance. Specifically, insurers, to your question, use us for two main reasons. One is risk selection, so determining if the risk is in line with their underwriting strategy and at what price it makes sense to underwrite the risk. And the second thing they use us for is accumulation and portfolio management. So understanding capital adequacy, regulatory reporting requirements, and informing their reinsurance buying strategy. And today we serve close to 150 organizations, from retail and wholesale brokers through MGA and primary insurers, reinsurance brokers, reinsurers, and insurance-linked securities investors.
Now, how is CyberCube using AI within the services that it provides to the industry?
Yeah, so CyberCube's been using AI for a number of years now. We had a relationship with OpenAI more than 18 months before ChatGPT was released. And the main use for AI at CyberCube so far has been taking vast amounts of unstructured data that we collect and creating structure around that data to drive analytics for our clients. We are also in the process of launching some agentic reporting capabilities in some of our core products, which we're pretty excited about. And actually, we're just getting started in what AI means for the personas that we serve in the insurance industry. So I think there's a lot of potential to unlock value for our clients and the market as a whole as we continue to build.
In terms of CyberCube's regional presence, how does the firm see Asia, and what are your growth plans for the region in this in this new phase for the company after the recent growth capital raising?
Yeah, so the Asian market is critical to our medium to long term growth plans. The Asian market is one of the fastest growing global markets for cyber insurance, arguably the fastest growing. There's traditionally been low insurance penetration, and there's been rapid digitization, and that creates a massive opportunity for the cyber insurance industry and CyberCube by extension. So we operate globally today, including in Asia, where we serve several regional leaders in insurance and reinsurance, along with a growing cohort of brokers. But Asia remains a really key growth driver for our business. And so we're constantly striving to drive greater regionalization in our models and ensure optimum data coverage. Keen to support the fast-growing cyber insurance market in Asia in any way we can.
How does the region fit within CyberCube's broader growth ambitions globally? Do you expect Asia to power a significant amount of the growth in the coming years?
Certainly, in terms of new client acquisition, I think we see significant potential from the Asia Pacific market. We've been operating in North America since late 2017, early 2018. So we have long tenured established relationships with a bunch of market leaders in North America. Strong push into Europe started sort of round about 2020. Again, strong cohort of market leaders across UK and Europe. Asia is really the next big sort of frontier for us. And so we serve a bunch of organizations there today, but we're really just getting started. So when we look at where our revenue comes from over the coming years, a big source of new logo acquisition and new client acquisition for CyberCube is the rapid growing Asian cyber insurance market.
I would say the region as a whole is huge, and every country has a different cyber threat landscape and a different data privacy landscape. Are there any particular countries in the region that you see as being critically important in terms of the growth of CyberCube's operations?
I think there's a bunch that we see as being critically important. I think India has been a market that has been growing quickly from a CyberCube perspective. Korea, we've been in for a long time. Japan, just given the scale of some of the multinational insurance companies domiciled out of Japan, is a key market for us. In the broker space, Australia and New Zealand is definitely a key focus area for us. And the opportunity in China is huge. It's a challenging market for us to address for a few different reasons. But clearly, our long-term strategy, how we address the fast-growing Chinese market is going to be pretty key as well.
Yeah. Recent events have sort of highlighted that, the corporates in Asia, among corporates in Asia, there remains quite a significant protection gap in the cyber insurance market compared to other regions like North America and Europe. Is that changing over time? And what are the main things that are driving, more take-up of the product among companies in the region?
Yeah, so there is a significant protection gap in Asia. There's still a significant protection gap in North America as well, frankly. But that gap is definitely greater in Asia, as you say. I think there's a few things that are driving the take-up of the cyber insurance product in the Asian market. I think the first is sort of regulatory changes, particularly around data privacy in the region. There's been pretty significant developments in China, India, Vietnam, and a bunch of other countries. That's leading to larger fines, more mandatory reporting of events, a shift in legal liability. And so I think the demand for cyber insurance is being driven largely by a desire to offset this compliance risk and to access post-breach expertise and services. And insurance is a great way to access those services. I think you've also seen high-profile events around the world, like here in the UK, for example, with Jaguar Land Rover and Marks and Spencer's over the last 18 months, and that's pushed cyber insurance high on the board agenda, and it's also impacted companies that are both upstream and downstream dependencies of those organizations, and so that's quickly impacted companies around the world, not just here in the UK. And has had billions of dollars of economic impact. So I think you've got a combination of increased regulatory oversight leading to greater fines and reporting requirements. You've got high-profile cyber attacks in a number of industries around the world. And you've got the continued rapid digitization of the Asian economy. You put all of those things together, it's a perfect recipe driving demand for the cyber insurance product.
the data privacy landscape out here, it seems to be tightening very rapidly. I mean, Hong Kong just passed a new cybersecurity law last year, and we obviously saw the high-profile events in Korea, in South Korea with Kupang. These events really must kind of drive it home, just how serious the cyber threat is, and obviously with government mandated laws, there is a clear incentive for companies to act and protect themselves against these very new and novel threats to their businesses.
Yeah, there's no question that data protection regulation and broader cybersecurity regulation is driving an uptake in the product, and that's as true in Asia as it is in many regions around the world. And I think that you've also seen an increase in supply chain related attacks on organizations, where attackers can magnify the impact of a particular attack by impacting upstream and downstream dependencies of a company, and that's just magnifying the risk that organizations are exposed to. And so I think you put those things together, and that is contributing significantly to the growth of the product in the Asian market.
Are you finding that cyber insurance is also gaining more traction among small and medium enterprises? I mean, as you say, even among larger companies here in the region, the take up of the product is still there's still quite a big protection gap there, as you say. But are you finding that, given the systemic events that we've seen with the likes of Jaguar Land Rover and Asahi recently in Japan, more and more small and medium-sized companies that are also waking up to these threats?
They are, without question, and the uptake in SMEs is growing, but that uptake is still infinitesimally small compared with the risk that's out there. You're talking about a fraction of 1% of SMEs in the Asian market currently buying standalone cyber insurance today. So definitely welcome the increased take up, but it needs to increase a huge amount more from where it is today. I think when you look at what cyber insurance means for an SME, it's more than just risk transfer. It's also the services that can be wrapped around that risk transfer product. And I think one of the things that the cyber insurance industry has done really well over the last few years is think about how it can unlock the market opportunity that exists in that SME space by providing a wrapper of services around that core cyber insurance product. And that's as true in Asia as it is in other markets around the world.
So not just providing policies, but also kind of preventing disasters before they happen.
Preventing disasters before they happen, and when they happen, enabling the organization to respond really quickly. So it's not just about offsetting the financial risk. It's about post-breach services, breach coaches, remediation, those things. It can be about ongoing monitoring of the cybersecurity posture of that SME. It can be about providing some of the tools and services to make that SME more cyber safe, leading to lower likelihood of an event occurring, and when an event does occur, a lower magnitude of event because it can be remediated more quickly.
Is that a fundamental component of CyberCube's service and proposition? The idea of preventing fires before they happen, and what role does data have to play in ensuring that?
Yeah, so we focus very much on the financial quantification of cyber risk. And so we work with brokers who are advising their clients on their cyber risk posture and how that will look to an underwriter. So prior to an enterprise purchasing a cyber insurance policy, they'll work with their broker to say how you would appear to an underwriter and any things that you may want to remediate as it relates to your cybersecurity posture before the point of underwriting. We'll then work with the underwriter to provide a more detailed view on the cyber risk posture of that enterprise and how that fits within the cyber insurer's underwriting guidance and pricing models. So certainly prior to any policy being binded, we are working closely with all of the constituents along that value chain to make sure that everybody understands the relative cyber risk posture of that organization. And often those corrective measures are taken prior to the point of underwriting in order to optimize the underwriting result for the enterprise on the other side.
Given the ongoing market softening and the influx of capacity that the cyber insurance market's seen, it's actually a great time for companies to be buying cyber insurance. Are you finding that many corporates that you spend time with and brokers, they're using those premium savings to obtain much stronger coverage, particularly when it comes to the sort of newer evolving threat actors?
Yeah, it's definitely a good time to be buying cyber insurance. And I think the products that are out there, for the most part now, are fantastic solutions for transferring this risk. I do think that we are seeing, with the softening market, more people coming in to purchase the product. But there is still a significant education piece that needs to take place. Like there are still far too many SMEs that think that cyber risk is a risk that is unique to large enterprises, and that is absolutely not the case. And the evidence of where threat actors are targeting today suggests that this is very much an SME problem. So there's still a big piece of education that the market needs to do in order to ensure sufficient uptake from those SMEs and continue to drive penetration of the cyber insurance product.
And if we take Asahi as an example, that shut down production in Japan for several days, and obviously that had quite a large impact on the downstream customers of the brewery. If pubs can't serve their customers. I can't imagine many people thought that a similar story with Jaguar Land Rover in the UK. It had such a huge impact on all of these small companies in Jaguar Land Rover's supply chain, and many of them probably never imagined that this was something that they had to worry about until, of course, they do, which is what we saw last year.
Yeah, I mean the Jaguar Land Rover event on its own was estimated to have had a $1.9 billion impact, or economic impact, and contributed to a government bailout of the organization. So yeah, the upstream and downstream impacts of these attacks are becoming far more profound, as is the litigation around some of those attacks. And so, this is going to continue to drive penetration of the cyber insurance product. And these high-profile examples, I think, certainly alert the large corporates to the need to have standalone cyber insurance, and many still don't. But what it also does is impact the supply chains, which can be large enterprises or SMEs. It's indiscriminate in that sense.
Part of what makes cyber threats, quite frightening is just how rapidly they evolve. We're seeing that at the moment with the advent of AI technologies, and how threat actors are using those AI technologies to attack companies and governments. How big is the impact of AI on the cyber insurance market? And is the technology giving rise to new risks that the cyber insurance market hasn't yet fully managed to process?
Yeah. So AI is without question fueling a substantial majority of attacks today in different ways, whether that's, better phishing emails, ransomware exploits being developed more quickly. And we're seeing frequencies up across the board. Losses for 2024 and 2025, obviously still developing. So severity is a bit more of an emerging picture. But when we think about AI and what it means to the threat landscape, we really think about it in three ways today. So one is that those existing attack vectors are just getting faster and more effective. Like the conversion rate is higher for a ransomware gang now in the post-AI era than the pre-AI era. The second thing we're thinking about is enterprises around the world are rushing to deploy AI technology in their core business processes, and that's leading to a bunch of points of accumulation and aggregation points that didn't exist 3 or 4 years ago. And so thinking about and modeling those from a potential catastrophic event perspective, as we have to do for our clients, is something that we're spending a bunch of time thinking about. And then the third thing is, most AI risk today sits outside of the definition of the cyber insurance policy. It sits in tech E&O or marine or property. And that remains a big uninsured opportunity for the global insurance industry. And so we're certainly spending time thinking about how to model AI risk, both as it sits within a cyber insurance policy today, and also that AI risk that sits outside of that cyber insurance policy.
AI, and its use by threat actors is certainly keeping people up at night at the moment. Another cause of a concern is obviously the rise of global systemic cyber events involving cloud services providers. And, we've seen quite a few of those recently with Oracle and Amazon Web Services and Cloudflare. How much work is CyberCube doing with clients, on modeling these kinds of events, and just how big is the threat that they potentially present to companies around the world?
Yeah, so there's no question that the internet is becoming more concentrated on a few hyperscaled cloud service providers. CyberCube, since really the origins of the company, has been thinking about and modeling on behalf of our clients what are those critical points of aggregation that can create that real systemic event for the cyber insurance industry. And so that's really what we've been working on for close to a decade now. And that's what a lot of our clients rely on us to provide models and perspectives around. But there's no doubt that landscape is changing and will continue to change. We've seen significant concentration onto a relatively small number of those very large cloud service providers, but there are also a bunch of other core technologies that underpin how the internet works that create points of aggregation that are maybe spoken about less than the sort of Amazon Web Services examples. So yeah, absolutely, certainly something that we continue to spend time on and support our clients in. And really the foundation of CyberCube's business has always been modeling accumulation on behalf of insurers, reinsurers, reinsurance brokers, etc. Like that's really the foundations upon which this house is built. And so the other things that we do rely on us continuing to maintain a leadership position in modeling accumulation and potential catastrophic cyber risk.
I mean, these events must be, these events are so large and systemic that, by their very nature, they must be extremely challenging to model.
Yeah, they are extremely challenging to model, but that's why we've had more than 100 people today. We've been doing this for more than 10 years. And so I think we have helped the industry to move a long way in their understanding of these points of accumulation. Because actually, when you break down some of these large cloud service providers and you start thinking about, well, what regions are affected and what regions do people have data stored in? And then you start thinking about what services people utilize within those large cloud service providers. And so certainly with version 6 of our flagship catastrophe model last year, we introduced this concept of regionalization around major cloud service providers. So you can start to get pretty forensic pretty quickly on where that risk exists and what it means to a portfolio of insureds.
All right. I'm conscious we're almost up to time, and I've got through most of the questions. I've got through all the questions I wanted to ask. Was there anything else you wanted to talk about?
No, I think the last thing to say is our excitement about supporting the fast-growing Asian market. CyberCube is very much open for business in supporting the Asia-Pacific cyber insurance market. We work with a bunch of industry leaders there today, but we're really just getting started. So look forward to connecting with as many of your listeners as we can and continuing to wrestle with one of the defining risks of our time in cyber risk. So delighted to be able to spend some time with you, and thank you very much.
All right, great. Well, thanks so much for joining me this afternoon. It's been really interesting to hear your perspectives on the evolving threat landscape and CyberCube's work within the cyber insurance market. So thanks very much, Chris.
Thanks, Aidan.
That's all from us in this episode of Between the Lines. We'll be back again in 2 weeks. In the meantime, you can connect with us on LinkedIn. Make sure you're subscribed to our daily and weekly newsletters delivered straight to your inbox. And of course, we'd love to hear your feedback on the podcast. Email us at editorial@insuranceasianews.com. I'm Mithun Varkey. Thanks for listening.